Hey everyone, Kyla. This is my weekly market update. Welcome. What happened in the stock market this week? The markets were a little bit spooked out this week. I got some information on taxes, which nobody likes to hear about taxes. Had a little bit of a sell-off on Thursday. The market ended the week broadly down, but Friday was pretty strong, saw some photosynthesis. There was a pretty big hit on new home sales. The new home sales were plus 21%, which is high. Over 1 million units for the first time ever, beating expectations. The big movers of this week, Equifax had a pretty strong earnings report. Also, I thought it was interesting because there's a crypto called EFX, so I'm wondering if there's some confusion. Netflix got beat up in the market this week. They missed subscribers, and also that's just getting to be a pretty saturated space. You know, you've got Disney Plus, Amazon, Hulu, HBO, like everybody's letting me develop a video streaming service. Netflix missed on earnings because they missed on subscribers. The pandemic brought forward a lot of Netflix growth. Now it's Netflix has to outperform everything in order to get back to where their baseline is. So we'll see if they can maintain their moat. The Qs, which is tracks the NASDAQ, it's an ETF, bled out $6 billion over the past week. Money is also partially going back into financials, energies, and materials. Partially, I think, a value rotation that we're seeing there. People are like, okay, things seem to be high flying. How much longer can all this growth last? I think we're just seeing a big rotation across the board. Big Five are delivering earnings next week. It will be pretty interesting to see how they perform and how that goes and how the market responds, because these guys make up 22% of the S&P. So what they say matters. The top performers of 2021 so far, Dogecoin at over 10,000%, which makes me a little bit sad. Then GameStop, Ethereum, and Bitcoin. And then lumber. Capital gains change. So Biden made the proposal that capital gains tax would change from 20% to 39.6% for people earning over $1 million a year, which means that federal taxes could be as high as 43.4%. The market didn't like that, said Biden, oh, what's up, cut it out, stop. The market didn't like it, and they told Biden as such. And Biden has also talked about raising the corporate tax rate from 21% to 28%. So I don't know how that'll work. The theory is that corporations will just pass the tax off to consumers and be like, your problem now. This chart is floating around as a way to show it's not going to impact the stock market if we do have this cap gains increase. It's just something to watch out for. People will just park their money into real estate or tax advantage assets. People are smart. It's called loopholes. We got to go after the loopholes. You can set rates at whatever you want, but if you don't fix, you got your faucet, right? You're like, my sink is leaking. I don't know what to do about it. I need a different nozzle. And okay, sure, like, and you get a different nozzle, but the problem is with your pipes. Now my nozzle is new and cool, and your sink is still leaking from the bottom. Your pipes are rusty and broken, but you got this fresh new nozzle to make people think that it's working and that it's changed. But really all you've done is just change the nozzle. You haven't changed the piping at all. So we gotta change the piping, if you ask me. So crypto had a pretty weird week. It started selling off on Sunday. There was a couple of different news points behind that. There was a power blackout in China, and then also the Coinbase led to market exhaustion potentially. There was a weird report on the US Treasury crackdown and saying that they were going to invest companies for money laundering with crypto, which turned out to be unsubstantiated. Turkey was also planning to ban crypto. I think some of the movement in Doge and the altcoins has led to a distraction from Bitcoin and Ethereum, because I mean, right, there's capital, but that capital has to find a home somewhere. If all this money goes into altcoins, how will that impact Bitcoin and Ethereum moving forward? And equities. It has been experiencing relative weakness since then. Dogecoin had a pretty wild week as well. It's down 30% now, so, but it's pretty interesting to watch it. Somebody mentioned that these investments don't even have to have a story anymore. It's literally just supply and demand. It doesn't matter. The new set of investors are not going to look at financial models. They're not going to sit down and be like, how is this going to last 50 years? It's more like, how can I make money now? There's no value or narrative that's required here. All these other altcoins too, like there's one, Scam Coin is an actual coin that has a $1.5 billion market cap now. There's also this coin. So there's a lot of different coins with a lot of different purposes making waves in the crypto space. There are massive amounts of money piling right in there, which is fun. Supply and demand are the only things that matter, apparently. Where is inflation coming from? Is inflation actually transient? Cost pressures are the #1 topic on earnings calls now. There's also a semiconductor shortage. That's gonna make some problems. It's showing up in used car sales prices. Factories are starting to go idle. Palladium, as you see here in this chart, is on the move. So is lumber. There's just a lot of weakness in supply chains, and we've got to figure out how to address that. And it's interesting because companies are not investing in CapEx. So if you don't invest in CapEx, how are you going to sort of move your business forward? They don't see a need to invest in CapEx. I don't know. I'm not a CEO. I don't make the rules, but I feel like you should invest in CapEx. Just my 2 cents for corporate America. Kimberly-Clark missed on earnings because of pricing pressures, because of inflation. They make toilet paper, Huggies, and Kleenex. So it's interesting to watch the Fed be like, hey guys, no inflation here. What are you saying? And then you've got companies that are actually like, hello, we're so worried. We're so worried about inflation. Maybe you should be worried too. I don't know. Price hikes from these supply chain bottlenecks. Also labor shortages, that's gonna all put upward pressure on prices, right? That'll make things harder to be transient because if you have actual structural weakness, it's gonna take a little bit of time to fix. With the labor market, that'll be interesting because this is a chicken and the egg problem. We can automate jobs over time. We can say, okay, robots, you need to do this and that. But I don't think that we have a plan in place for what that would actually mean for the economy and how that would change jobs and how we think about different sectors. A tight labor market will create cost pressures up the board for sure. Also, supply chain disruptions and input prices are a big worry here. And then you got lumber. Lumber is on the rise due to supply chain bottlenecks. Firms are limiting capacity. Builders are limiting capacity. Everybody is wanting a home and wants to renovate their home. And also with lumber, it's not a shortage of trees, it's a shortage of lumber. So they've got the stumps, they just don't have the capacity at the sawmills, or the capacity isn't being created at the sawmills in order to process the lumber fully. This whole thing, it's actually an issue with the supply chain. The lumber futures are recovering and they're probably going to be fine. They got plenty of stumps, just not the sawmill capacity to turn it into lumber. I became an expert on lumber this week for my video. One key member of Lumber Twitter retweeted it. He was like, market top. And I was like, I guess. but inflation's only 2.6%. So everybody just keep that in mind. Inflation doesn't exist. Yikes. Also, I wanted to talk a little bit about the balance sheet economy, which I think is the cycle that we're in. My big thesis, if you've read my meme piece, is that we're in this memification economy. And I think a lot of that memification is supported by the balance sheet economy. We're in this debt-fueled economy driven by liquidity and low interest rate. And basically, as long as you can access debt, I was talking to Prometheus Research about this. The whole thing is companies will remain alive even if they're a zombie company because they have access to debt markets. Debt is really fueling the progression of the economy. In the US high yield bond index is now at a record 1.5 trillion. So yeah, C companies can now borrow at 8% from a high of 20.2% in March of 2020. It's a fun fact for you. Investors are chasing yields to the absolute bottom. People are desperate for yield and they're pushing into the riskiest of balance sheets in order to get exposure. There's been a lot of stimulus, both fiscal and from the central bank. An estimated 12.3 trillion in the US. It's a lot. And our total GDP is 21 trillion. Speaking of GDP, most things that drive the GDP are fiscal support and reopening demand. Well, what's going to happen after both of those are gone? You tell me. Consumers are benefiting from the easy money economy too. Margin debt is at all-time highs, so the amount of money that investors can borrow from their brokerages, that's at all-time highs due to a combination of low interest rates and liquidity. And it's not that high relative to S&P 500, but it is pretty high relative to GDP. It moves in line with S&P 500, but it doesn't move in line with GDP as much. It's high relative to the economy. And obviously the stock market and the economy are two different things, but it's still like, okay, something feels off. This week was weird. Most weeks have been weird. This week it was a flurry of altcoins, SafeMoon, Dogecoin, just really ripping. And then the tax worries where the market was, it was so dramatic. It was like, right away. But yeah, economic data was strong. Implied volatility is at the lowest level since the pandemic, but there still feels a sense of market whiplash. I'm still building out my core portfolio and my options trading. That's going to be a really big focus of mine over the next few weeks, and I'll be sharing it with everybody. But I'm keeping an eye out for companies with pricing power and that operate in moat industries. Next week is really big because the 5 largest stocks are reporting earnings at the same time, which is cool of them. They're doing it like they're friends. Super excited for the 5 boys to report earnings, and they're 22% at S&P, so absolutely no big deal. That was the market this week. Pretty much flat on the week, but a lot of stuff happened. So next week we'll be watching out for the big techies to be reporting to see what they say. I post daily market updates on TikTok. If you want to hear me talk for 1 minute every day, that's where I do that. If you'd like, please subscribe and hit the thumbs up button to show that you like the stock market.